Hey guys, what's up? Alec back with the daily stock market, and look at that. Redbox Entertainment is up 40% on the day, and if we scroll out to the month chart, 379%, 600% in the span of 3 months. So we're going to talk about Redbox, Amazon, Shopify, Tesla, and we're going to try to talk about as many different stocks in this video as possible. So we're going to spend less time per stocks, but hopefully we'll be able to talk about 5 to 8 different stocks in this video. So make sure you stay throughout this entire video. It's going to be a quick, rapid fire, and you're not going to want to miss any of these updates on these stocks. Also, earnings week this week is very slow. There's no good companies reporting earnings at all. So most likely we're going to have to wait till next quarter for earnings to fire back up again. I think in July and August we have some big companies reporting earnings again. So let's jump right into Redbox Entertainment. You guys all know Redbox. Well, I should say most of you guys probably know them. They're like Netflix before Netflix was Netflix. You would see that Redbox outside of like Walmart or Target, and it's like $1 rental for a movie. And they, in 2021, they were at $12 per share, but they absolutely crashed in 2022. And I'm surprised they were even around as long as they were, honestly, because of Netflix and everything like that. They did crash around 90%. And Redbox is a great example of what could come in the stock market in the next few months. There's plenty of stocks that crashed around 90% in just the span of around a year, 6 months to a year. So for them to get back to their levels of pre-crash, they're going to have to rally around 500% to get back to those levels that they were at before the crash. We also see them recently IPO in 2020, December 9th. Personally, I'm not buying any Redbox that is above $5 per share, so I'm at least waiting to $5 per share, and I would look to sell around $10 per share. And I would only put like $200-300 in something like Redbox at $5 per share. Where I would really put more money in is closer to $2 to $3 per share. Those are my price points, and we're going to do rapid fire. So let's move on to the next stock right away. So the next one on the list is Amazon, approaching $100 per share. It's getting super attractive for long-term holders. It's down 12% in the past week, and it's down 26% in the past 3 months. It's one of the only big tech stocks that's down to a 1-year low, and it's probably closer to a 2-year low. All right, if you pull up Apple, if you pull up Tesla, none of them are at a 52-week low. They're not, and especially not at a 2-year low, let alone. So Amazon looks like has the support right around $106 per share, which it's approaching right now. It also has a 3-year support of around $90 per share. So I think like $85 to $90 per share is the prime place to be buying Amazon, or below $100 per share for long-term holders. I think Amazon will definitely gain around 20-30% per year for the next 5 years. Amazon's definitely not going anywhere, and dollar cost averaging in is probably the best thing you can do, especially with the share price closer to only $100 per share. You can own more shares, and that can accumulate over the long term. And if we want to take a peek at what analysts have to say, in the next 12 months, they're predicting a 63% upside, which is $179 per share in the next 12 months. And that's on average. And these analysts have just reiterated this all this week. Most of them are 5-star analysts coming from Goldman Sachs, BMO, RBC Capital, Bank of America, all above $150 per share in the next 12 months. So I think Amazon is one of the strongest buys in the stock market right now, especially if we see them closer to $90 per share or even $100 per share for 12 to 24 months of holding. You can see a great upside, and that's why Amazon is actually one of my top picks in the whole stock market as of right now. Shopify is the next one we have up after that, down 6% on the day, and this has been a bloodbath, okay, from highs. Remember, like Redbox, they're down around 80% from highs. So Shopify is a stock that could experience a 300% growth, 400, 500% growth, especially if you hold it for the next 2 to 5 years. Now, this is not financial advice. I'm not saying that that's going to happen, and it's not guaranteed, but I think Shopify is a great company. I've been doing some deep dives on them in the channel, and they've been growing their revenues consistently, growing their net income, and they look like a great company overall. They've had an all-time high of $1,700 per share. So if they were to get back up to $1,700 per share, that would be almost a 5x growth on the stock. Okay, so it would be over a 500% gain for Shopify to get back to something like $1,600 per share. So they've been absolutely mutilated, to say the least. And personally, I'm buying under $350, dollar cost averaging into $350, because we don't know how low they are going to be going. But I think that the bottom is very, very close. I think the lowest we'll probably see Shopify go is $300 per share. They probably won't go under $300 per share, but that's just my personal opinion. And you can also see that they're starting to level out and consolidate here for the month of May and June. Analysts on average have a 75% upside, which would be a $611 Shopify stock price in the next 12 months is their predictions. Okay, this was based on 28 analysts as well. So you can see that they're coming from all over. And most analysts have them above $500 per share. And some have them even above $800 per share in the next 12 months. So needless to say, there's huge upside potential with Shopify. But there, of course, is risks involved. And Shopify is one that I challenge you after this video to do your own deep dive in. Look at the revenue, look at the net income, look at the balance sheet, look at the news that's been going on recently around the company, the CEO, interviews with the CEO, listen to earning calls, 10Ks, so on and so forth. If you don't know how to do all that stuff, by the way, go ahead and message me on Instagram, and I have a program that's developed for beginners to become a stock market professional just in the span of 90 days or less. So message me on Instagram for more information on that. You also get access to my close friends list, which shows you what I'm buying, when I'm buying, how much I'm buying, what stocks I'm buying, when I'm selling, price targets, and everything in between to get you kickstarted and trading stocks right away, even if you're a beginner. And let's do our quick stock market update on Tesla. Down 15% in the past 3 months. We had highs, recent highs, I should say, of $1,100 per share. And from those recent highs, they're down around 40%. So you're getting about a 40% discount from highs. They're basically at a 52-week low, which we see is closer to around $600 per share. And on the channel, you guys know I like buying in the $600 range. I dollar cost average anything below $750, and I load up a little bit more in the 600s, and we're still looking for that $500 for it to go down to that $500 mark for me to really load the boat and buy a few shares at $500 per share. Tesla also announced that it's doing a 3-to-1 stock split. So in the future, it could take a few months. We don't have exact details of when it's going to split, but we can see Tesla closer to around $250 per share, $200 per share. It depends on where the stock price is when Tesla does that 3-to-1 split. On average, we see analysts very split on Tesla stock with an average price of $939 per share in the next 12 months, which implies a 34% upside. Some analysts have them as high as around $1,600 per share. And as you can see, some analysts have them as low as $67 per share, which would be a 90% decrease from current prices. You can see some of these are reiterated 4 days ago, 5 days ago. The analysts that are above 4 and closer to 5-star ratings all have above $1,000 price target on Tesla in the next 12 months. So that's really what's important to look at. These guys like Brian Johnson with 0-star ratings that's saying $370 per share is kind of messing up the average. So take the low ones with a grain of salt. That's why it's always good to scroll down and see where these analysts are coming from, how well they're rated. You can even click in and see like their success rate, their average return per year, and so on and so forth for the analysts. Now, I've also been getting a lot of requests to talk about Ford Motors, so let's talk about them. And they're down pretty big in the last 3 months, down 22%. And from the highs of around $25 per share, which they peaked earlier this year, they're down considerably, around 50%. So that's why everyone's wondering about them right now, if they should be buying. You can see clearly that support is right around that $12 mark. So we're pretty much banging on that support's door. Right now, there is a fear and there is a real chance that Ford could break that support and go lower than $12 per share. The more time, let's zoom in a little bit here. So the more times that it tests this support of $12 per share, we see once it tested on May 12th, and then it tested again on May 24th, and it looks like it's going to be heading for a third time again. So the more times it tests that support, the worse it's looking for Ford Motors. So dollar cost averaging, if you're looking to be diversified into a vehicle company other than Tesla, then Ford is a good place to look. I think under $10 per share is a lot more attractive. I think it's very possible to see Ford closer to $10 per share once again. So personally, I'm very patient when it comes to something like Ford Motors. They've been around a long time. They're not going to be going anywhere. And I think that there's a strong possibility that I can buy them between $6 and $10 per share. And that's my zone that I'm looking to buy at. If we look at what analysts have to say about Ford, you can see a 46% upside in the next 12 months to $18 per share is the average that they have. A lot of these weren't reiterated very recently, so you can take it with a grain of salt. However, we see some 5-star analysts, even a 4-star analyst from Goldman Sachs, around $14 per share in the next 12 months. You can see Ivan, 5-star analyst, $22 per share with a 60% success rate. And moving right along to Disney stock, a lot of people are wondering about Disney at $100 per share. You can see from highs, they're down around 50% or more. Yeah, right around 50%. And they're way past a 1-year low, a 52-week low. And they're pretty much at a 5-year low right now. So let me repeat that again. Disney currently is at a 5-year low. If you bought in 2017 Disney stock, you lost money. It's at $100. It's at $99 per share right now, and in 2017 it was $105, even $110 per share. In 2017, there was no such thing as Disney Plus. Remember, Disney Plus is a huge revenue maker for them. They're growing subscribers considerably. They're growing revenues, and that's all new revenue, and the stock is down in the last 5 years. So it's almost like being a time traveler and going back to like 2016, 2015 and picking up some Disney shares for $100 per share. If we scroll down, we can also see they have a PE ratio of $68 per share, which implies they're a little bit overvalued. But in my opinion, I think dollar cost averaging into Disney is a strong thing to do for long term. I don't think they're going to be going anywhere anytime soon. And Disney's like a stock that you can hand down to your grandchildren or even your children. Disney brand in general is extremely generational. So I think Disney will stay relevant and stay on top and continue to capture new audiences and newer families that haven't had kids yet, but they're having kids in the next 5 to 10 years. They're going to capture all of those people as well. So with that being said, Disney was at around $200 per share. It's down around 50%. I think under $100 per share is a great place to dollar cost average. If you can, Disney's, it's not like we're talking about this is a household name brand that's currently at a 5-year low, which is a big deal in the stock market for something like Disney to fall 50% in just a span of around 1 year or 12 months. So it's absolutely crazy. There's a huge opportunity at Disney, but let's look at what the analysts have to say. And on average, we see Disney with a 48% upside in the next 12 months to $147 per share. And I do agree with these kind of statements. You can see they were just reiterated from 4- and 5-star analysts, all above $130 per share. So even if Disney only gets to $135 per share in the next 12 months, that's still a 35% upside from buying right now or buying tomorrow morning when the stock market opens. Remember, it's not financial advice. These are my own opinions, but I think these are pretty strong opinions to have if you are a stock market connoisseur. Disney stock is almost a no-brainer for me to buy into, especially because I do long-term holding for a lot of my Disney positions, 12, 24 months or more on Disney, and I think that's where Disney stock's really going to shine. And if I can get 20 or 30% per year on Disney stock, which I think is definitely achievable in the next 2 to 3 years, then that sounds like a good deal to me. However, just remember, we do see the very bottom support at $85 to $95 per share. So that could be below the boat zone if Disney does reach that $85 per share price target once again. So I hope you guys really appreciate that video. Drop a thumbs up on the video and share with a friend if you think that they will find it helpful. Thank you guys for all the love and support. Let me know if you guys like that faster style, rapid fire pace of stocks where we talk about more stocks, but we spend less time per stock. I didn't want to drag the video on too long, so I hope a lot of you guys did enjoy this video. And remember, if you want to get on my close friends list, or if you want to become more advanced trader in the stock market, go ahead and message me on Instagram. I have a special going on for the option trading program I'm going to include at no extra cost for all signups this week. So if you sign up for the stock market program, you'll also get the option trading program at no extra cost, and you'll be able to see my option trades as well. So we're going to be getting more involved with option trades. I post at least one a week, but I think I'm going to kick it up to around 1 to 3 per week moving forward. We'll do that for a few weeks to see how everything goes. So if you want to be a part of it, make sure you message me on Instagram. If you want to see success that other people have had, check out success number 5. Read through those on your own time. You can see those are awesome calls, 57% profits, 80% profits. Even smaller accounts are welcome. $150, 75% gain. And that was only from around $150 that they used of their own money to get that gain. And you can go to success number 4. There's now over 500 positive testimonials from different students, all using my program, the Daily Stock Market Close Friends List. So message me for more information. I'll shoot you over my full website so you can check everything out for yourself. Also, all right, guys, thank you for tuning in this video. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.